So I guess the one of the things that we have witnessed in the last 12 months in this country is an unprecedented regulatory outlook around new things that they want people to do, in the acceleration that they want in multiple spaces within the payments, be it around small banks thinking about financial inclusion or around driving the economy to a less cash economy than what has existed in the past. And to us, that opens up a number of opportunities from an investment perspective, from a perspective of entrepreneurs building new avenues of growth, as well as for many of the existing incumbents to think about how do they capitalize on the trends and take their businesses forward. One of the things that we thought we would do here is to talk about that key aspect and its implications across the ecosystem. And one of the first questions that comes up is around what is the business model of Payments Bank? I mean, this has been something that has been talked about for a lot in the press. How do Payments Bank could actually make money? What is the economic model in the absence of lending for these banks to become successful? I would love for Mihir, Ram, and Sohini to comment on that aspect, given that they come from very different vantage points on the same issue.
So, very interesting question. In the absence of lending, I think it takes you have to take a look at what banks do in the retail part of their business, which is where obviously payment banks, the whole aim of payment banks is to bring about financial inclusion. And I think at some point we should also figure out why payment banks, why did RBI and the entire ecosystem think that payment banks is the answer to financial inclusion, which is what we were all trying to strive, and maybe the incumbents have in fact not been able to deliver to the levels that were expected. But before that, how will payment banks make money in the absence of what's the business model? It'll be a little bit of trying to hold your ear, the other way around in the classical sense if you look at it. I think lending is a very important part, very important component. So there could be either models where if they are closer to the customer, if there is information that they have, can they partner with another lending institution to be able to help in the loan origination process? I think that will be a very important aspect of how payment banks deliver their, set up their models to be able to partner for lending with an institution which is indeed allowed to lend, and hopefully they can bring a value because they are closer to the customer, they know more about the customer, and in the process can either help in cutting the credit costs or in the origination expense. The other, of course, is the slightly more straightforward one, which is about being able to sell other products, the investment products. Of course, do we have products which are available and which makes sense for that kind of customer is again something that it will develop. Today, if you're saying you need to come up with even the idea of selling mutual funds, for example, to this set of customers is right now, I think, a very far-fetched thought. But once this customer comes into the banking fold, would there be pressure on the system to develop specific products for them? And then this becomes a very efficient distribution chain to be able to sell those products to them. I think it's a little bit of a long haul, but those are the possibilities I see. In the pure play enabling payments and getting small deposits, they would have to run their business really, really efficiently to be able to be left with a little margin. So I don't think, I think that's just covering the basics. Beyond that, for them to grow and be able to really be large institutions, or at least serving a large number of customers, they would have to develop these alternate models.
Great. Ram?
So there's a banking answer and a non-banking answer to this, right? And there's a short answer, which is how will they make money with great difficulty is the short answer. But the banking answer, I suspect, is most of what Sohini covered, which is really, can I partner with somebody else to sort of add value at an aggregate level to a consumer, and I don't necessarily need to sort of manufacture those things myself. Think about Reliance partnering with SBI, for instance, or Airtel, which has, I think, Kotak has partnered with Airtel. And so you can see those logical sort of symbiotic relationships already forming. But the non-banking answer is that, supply will drive demand, right? Not demand driving supply, right? So you build this railroad long enough and large enough, and that's the reason why Facebook bought over WhatsApp, because of the sort of value proposition of what the customer database is. And to Sohini's point, once you know information about 50 million customers, 75 million customers, that is gold today in terms of how that information can be monetized, whether through ancillary or adjacent revenue streams, or indeed under what is applicable by the RBI or by the regulators, what you could do to sort of concretize and monetize that data. And that's the model anyway. But will we get there? But the first point is we all have to remember that nobody's quite cracked the code yet, nor has the RBI, which is why the RBI has given 10 licenses to a diverse set of players, be it from somebody like NSDL, which is very different, somebody like India Post, which is of course very, very different, or telco players, 3-4 of them, which have a different sort of play in this. And I guess the theory is let 1,000 flowers bloom and innovation will drive what ultimately succeeds.
Mihir, you would have advised almost all of these guys in terms of thinking through their business plan.
I agree with Ram and Sohini saying that it's going to be difficult from the first couple of years to make money and grow profitably. But what we are seeing or expecting is that primarily 2 to 3 sources of income or revenue from a model perspective. I think the underlying premise is to keep the money within the system. So don't let the money which comes in the specific banking system of a specific bank move out. So use it to make multiple transactions, increase the velocity, remittances could be one of the options, bill payments, transfers, So all of these players are thinking about ways of how can we keep the money within the same ecosystem, because if they move it out, then you don't get that velocity and hence an opportunity to make fee-based income for those services. So I think that is the underlying premise on which most of these banks will try to work. As you rightly said, cross-sell and partnering with banks is another source of income, but that will be again limited in its nature, and it will depend on the partnerships that we are having with other banks. So these are the 2 or 3 sources of income. From a cost perspective, we really need to see how you drive down cost, how technology plays a role in navigating that. And the good part is, as some of these banks already have established distribution structures, existing customer segments. So how do they leverage on that with the ring fencing which RBI has suggested in place, and drive down cost even further than a normal universal bank can possibly do. So probably that's few areas which will have to be looked at to kind of drive down the cost, which will lead to making profits not immediately but over a few years. So that's what we believe is going to happen. And I would like to say that of these 10 players, it's going to be like running on a treadmill. Either you run fast and you kind of make it very, very quickly to where you want to go, or you just fall off. So we don't believe that all 10 are actually going to make it in the long term. It's going to be consolidation happening after a few years. Some players will rethink their plans, and 3 to 4 players at max, or maybe 5 players at max is what we expect to profitably grow and sustain over the long term.
Great. I think it needs to be seen how payments bank eventually evolve, because a number of arguments that have been put out can actually be leveraged in a non-banking setup. The argument of going into regulation is to leverage it in ways where you get certain kinds of competitive advantage, certain proprietary access that you can monetize. But I think it'll be pretty interesting to see how this part of the policy evolves over the next 12 to 18 months. Switching gears to the other side of the big policy initiative that was done, which was around the small banks, focused on driving financial inclusion. I think Ananya, Sohini, you guys have done a lot of work in this space. It'll be great to understand what have been the biggest pain points in financial inclusion. What is the ecosystem doing to address those? And do we believe that these small finance bank licenses could open up a new set of opportunities to address that issue, which as a country we have grappled for many, many years? Ananya, I would love for you to go first, and then Sohini.
A very good morning to everyone, firstly. So yeah, as we all know, the income gap in India is huge. So basically, financial inclusion to me is bridging this gap. So by this, I do not mean reducing the disposable income of the ones who are at the top of the pyramid, but rather increasing the disposable income of the ones who are at the bottom of the pyramid, which would actually help the economy grow as a whole. So yeah, there's a huge income gap, and this is how I see financial inclusion. Because the income gap is so huge, consumer behavior is very different. So the ones on the top completely think differently from the ones at the bottom of the pyramid. And this can make it a little bit tough for the service providers to actually provide the best possible solutions for the consumers. So I think this was one pain point initially. However, with the development of SFBs coming in, MFIs, of course, having new opportunities, with the payment wallets coming in, I think this would provide a better ecosystem to solve this problem. So, for example, MFIs can only lend. They cannot, the consumers cannot deposit cash into an MFI, whereas in an SFB, they can lend and take deposits. So this is a huge sort of change. One more pain point that used to exist was that MFIs, which typically were meant for financial inclusion, could not build brick and mortar shops. So by shops, I mean sort of offices, branch offices. It was very tough for them. They didn't have the finances. Now, however, which is very important actually to have that consumer connect to a certain extent, especially to the ones who are not very literate. However, now with the SFBs coming in, that problem is sort of solved as well. Another sort of issue which was present and is still present, which needs to be sorted, especially for financial inclusion, is that the ones, especially in rural India, they have this mentality of cash is king. And as with all of these new entities coming in, our economy is moving towards becoming cashless, or like you said, less cash. I think becoming cashless will take a long, long time, but yeah, moving towards less cash. So moving that mentality also can be a little tough. And I think this is a very long-term process. I think, again, with the sort of SFBs coming in, I think especially the mobile wallets actually will make a huge difference where this is concerned. So yeah, I think with these new entities coming up, relationships can be completely symbiotic. To give you another example, with sort of what a couple of MFIs are doing is that we are tying up with mobile wallets to ensure that the collections are also cashless, which reduces a lot of risk on the field. So there's no cash moving around on the field at all. And that's what we're trying to do to promote cashless economy in rural India. So yeah, I think a completely symbiotic relation, like I mentioned, between an MFI and payment wallets is one way forward. With SFBs coming in, SFBs would target a slightly higher TG, and I think that would again sort of help with financial inclusion. So I think we're on the right track. Like we all mentioned, there is a lot of work to still be done. There's a little bit of ambiguity as to how this would move forward, because it's still a very new system, new developments, and it takes time to actually see how a new system really comes into play. But I think we're on the right track. And if every institution, every different type of organization works towards a single vision, which is the growth of our economy, and to take India into, well, one of the most developed countries in the world, which is eventually the vision, I think it's the right step, and we're on the right track.
Great, thanks. Sohini.
So since Ram set some ground rules there for bank answers and non-bank answers, I think it's my responsibility here to give on this panel to give the bank answer to this question. Yeah, I think SFBs fundamentally are going to fill in that huge gap. But if we first look at, go one step behind to see why is it that the regulator thought we need this different kind of entity, because they have been through various regulatory interventions trying to, for want of a better word, impose some kind of responsibilities with respect to financial inclusions on all large banks that operate in the country. Now, have we been able to deliver? And if we haven't been able to deliver, if the banking ecosystem so far, whether it's private, public, state-owned, government-owned, cooperative, any kind of banks, have they not been able to do what this new set of entities will be able to do? I'll leave that, and I really don't want to answer that question. I think it's quite evident that the RBI is trying to do lots of things. But if we go back to why is it that banks like ours or others have not been able to go to that last mile, I think there are some key issues with respect to the processes that are followed, and also about what is it that you need to get that customer in a really cost-efficient manner into the banking ecosystem. And I think the answer there lies in not just what the previous question you had, Amit, which is about payments or enabling payments or facilitating payments. It's one step before, and it's the job that banks do in this process of identity and authentication. I think it is so tough to be able to, or the reason the costs are high or it just becomes slightly inefficient to be able to deliver financial inclusion is that this entire thing of for that last person or for people at the bottom of the pyramid, how can any institution efficiently establish identity and authentication? And if that can be done at the lowest cost possible, then of course you can build on top of that and be able to provide a whole range of banking services, the entire spectrum from deposits to lending to advice or what have you. So I do think that, I agree with Ananya here, that if we can find SFBs coming and filling in that space, then it will not only help them stand alone to help get more people into the financial inclusion or into the banking ambit, but also create a platform because there are multiple levels there, right? Like bottom of the pyramid is not just this one whole block. Rural poor is different from urban poor, and that entire thing that you can segment there. And there also obviously people have ambitions to move up the economic chain. So I think it will create a very strong platform for them to then be able to say graduate to universal banks, or for SFPs themselves to be able to offer competing products to that same customer if they want to stay, throughout that life cycle of that customer. That's the way I would put that.
I think what you said, both of you have been exceptional points. I think as we have looked at this market from a distance, we felt that there is probably the biggest transformation for microfinance and the taboo associated with it to probably being something that can lead the way for us to see a different future. And I think, Ananya, you made the point about frequency of collection, automated collection. That employs and helps you lower the cost of operations, allows you to actually reduce the risk and increase your exposure in a dramatic way. And Sohini, if people can help do the identity and authentication in a low-cost manner, I think the entire ecosystem there gets catalyzed in a great way. So this is one space where we felt that not just the small finance banks are going to do really well, but they're going to be very innovative technology service providers who will enable some of these institutions who have a lot of tacit knowledge on the ground to actually bring about a very compelling and a differentiated business model.
And Amit, sorry, just to add to that, just 2 quick points, right? One is, Sohini alluded to what are banks really doing and was there a need to sort of have more players, etc. But I think the reality is, when you reflect on the microfinance space in India, the funding for all the microfinance institutions was in fact coming from banks, 100% of it, right? Because it was a priority sector lending asset, and therefore those loans were sort of packaged to banks. So banks played a super important role in the development of the MFI ecosystem. Now, if you rewind the clock to what happened in the events in Andhra Pradesh, and therefore the sort of entire heavy hand of regulation that came into the microfinance industry, what small finance banks does is very, very simple, right? it reduces the cost of funds for small finance banks as compared to erstwhile microfinance institutions between 150 to 400 basis points.
Yeah.
And that, can cover a lot of carpet space, right? And if you think Bandhan, I know is not a small finance bank, but if you think about what Mr. Ghosh is trying to do there, he already has 8.4 million depositors in the 7 or 8 months that Bandhan has gone live. And unlike some of the newer private sector banks, it's not really an interest-led play on the deposits. No Bandhan depositor is getting 7% on savings bank account, for example. Right? But the 8.4 million of them who opened accounts, and think about what that means to the MFI thing. So it's a compelling opportunity.
No, I agree with you, and I think if I had to contrast it, MFIs did a great job around bringing access to capital to a part of a population which was marginalized. I think what small finance banks will allow these MFIs to do is to integrate the same population more deeply into the financial system of the country, because now they can not just borrow, but also contribute their capital. And I think if they drive better identity and authentication, which they can because they have a better and a superior understanding of that customer set, they will build very compelling businesses in the future. I guess just taking a segue from there, right, and a little bit of it got covered in some of the comments, so this might be a bit of a repetition and a bit controversial. How do you think, in the long run, the relationship between payments or small finance banks evolve and emerge with the big banks? Right? It's great to be collaborative, but the way you see the future unfold for each of these two is to become more competitive. And I would love for Ananya to talk about what she sees from the small finance bank side. Sohini, get you right at the end to give the big banks view, but before that, get Ram and Mihir's views as well as to how competitive this relationship is likely to become.
So I think my answer would, I guess there's so many different things that could play out that my answer would probably be a little bit diplomatic. But yeah, I'll sort of give you my perspective. I think there are a couple of things there. The first thing is that SFBs do have the opportunity, I personally think will have the opportunity to on tap apply for banking licenses, national bank licenses. This is my personal opinion. So the way I see this industry is that MFIs can, of course, on tap would be able to apply for SFBs. There have been a couple of players we already know who are sort of moving towards that. And then I think SFBs would be able to apply to become national banks as well. So that's, I think, one sort of thing that we really have to understand. And again, this is completely my personal opinion. I think where competition is concerned, the TGs are well defined. And I think if every individual organization does remain sticks to these regulations, I don't see it as being much of a problem. I think of it as being actually, in fact, almost an advantage. It's a pro, I think. So if we see, when we've spoken about this, that SFBs would lend and take deposits from the ones who are from the lower income gap, whereas national banks, of course, lend to all of us out here and take deposits from us. So individually is still in a position where they're trying to figure the industry out. They're still really trying to understand the business model, how to optimize costs, how to really optimize processes, sort of get the most out of their services, provide the best possible financial and non-financial solutions. So there's a lot still to be done, and I think thinking of competition is very important, but it would probably be the next step. So I think we're on the right track, yeah.
Great. Ram?
So let's talk about SFBs and payment banks separately, because they're fish and fowl, right? They're very, very different entities. As far as SFBs are concerned, I don't really see the need for them to morph into universal banks, because If memory serves me right, I think it's 40-50% which needs to be less than 25 lakhs, and that's pretty much the only conditionality, right? And they're not really in the business of, lending to large corporates in any case. So there is no incremental regulatory tax franchise benefit to be derived from them attempting to morph into universal banks, as it were. And we all know that India is a significantly underserved society insofar as credit is concerned, which explains the burgeoning of literally every NBFC is doing well, right? From the older NBFCs to the newer one. I mean, we think about, the new players in the block like Capital First, for example, who's already built, 75,000 crores of balance sheet, or the older ones, or Sundaram Finance from the past. But all of them have ecosystems on the asset side of the balance sheet they've built. And there's still the micro SME segment and the individual entrepreneur segment is significantly underserved, right? And once you have the capacity to take on public deposits, which many NBFCs don't have, by the way, because they're all non-deposit taking NBFCs, and the cost of those deposits is low, as long as they don't screw up anything significantly, I think there's nothing that I would sort of concern myself with. Think about it. I mean, the US has, 8,000 banks, right? 8,500, something like that. And only a bunch of them do corporate lending or investments or investment banking or, M&A or whatever it is. A bunch of them are, in fact, regional banks who serve community niches. And India needs a lot more. Clearly, the cooperative banking experiment, how do I put this delicately, leaves a lot to be desired. And therefore, there is vacant space and a large canvas to play there. Insofar as payment banks are concerned, here is my hypothesis of what will happen. 2 or 3, like you mentioned, 4 or 5, will succeed, right? But then there is no compelling entry barrier, right? Soni and her team will be researching it furiously, and the minute they find this super cool thing that works, or this little widget or gadget or customer acquisition or cost reduction or whatever it is, in today's world, it'll take you a little more time because of legacy technology and it'll have to wait in technology prioritization. But if you crack the technology problem, it'll take you 3 months to replicate it, right? And branded access, and off you go. So those lines are going to blur, right? Except for the sort of lending part. Anything which is sort of successful there will kind of bleed over on the other side. And anything which is not, as Ananya said, they'll try their darndest to sort of up-tier the licenses into something that makes more sort of meaningful economic sense. So it's a lot of sort of nudging and pushing going on right now.
Agreed. Mihir.
Sorry, if I can just, I just sort of want to understand a little bit more from you, the morphing question, the morphing sort of aspect from SFB to national banks. So my personal opinion is that I think it's still, we're still at a sort of nascent stage where that still has to happen. And as I think if the government could encourage new MFIs to sort of come up and sort of morph them into SFBs, I think if this process starts happening, it could really fasten the pace of our economy and create a sort of increase the GDP in that sense. So I just wanted your view as to whether you agree with that or
I
what
completely
sort of,
agree.
yeah.
I completely agree because again, MFIs are constrained, as you know better than I do because you run that business, is because you have a cap on lending on one side of the balance sheet and an inability to get low-cost funding on the other. And all that an SFB solves for is give you the sort of license to play on the liability side of the balance sheet, and therefore, and now that the sort of RBI has said that licenses are on tap, there's no reason why every performing MFI ought not to legitimately demand that they become an SFB.
So the morphing is sort of still required.
But from SFB to universal
Yes.
bank, I'm not so sure.
Yeah. Okay.
Mihir.
Yeah. So basically, I'll just talk about the comparison between payments bank and universal bank. So typically, what we believe is that there are clear white spaces where each of these segments can play in. Payments bank have their inherent strength of an existing distribution network, which currently banks don't have in the rural underserved areas. They also have a large amount of customer base because of their group companies, especially the telcos and the other entities. What they are restricted by from a regulation perspective is that they're not allowed to do all products. So for offering the complete suite of services to the customer once they are onboarded, they will have to rely on partnerships with either NBFCs, financial institutions, or universal banks. So I think that's going to play in from a partnership perspective. Also, there is a cap on the amount that you can take in as a payments bank. So, the target customer group will again be, the underserved or, the financially excluded or not fully included population. So that's going to also kick in. From a universal bank perspective, if they tie up with the payments bank, there are inherent, again, certain advantages. So they get access to a distribution network. They get access to customer segments whom they can cross-sell their products, increase their fee income. There will be some competition between both for the same set of segments. And what we believe is in the long run, there will be certain clear propositions or value cases which will emerge, which, payments bank will be very, very strong at. And universal banks will, try and catch up or follow up. The example being wallets, which happened recently. So Paytm and the other entities launched wallets in a successful way, but universal banks were slightly late in adopting that. Axis came in with Lime, ICICI had Pockets. But again, if you see the installations and downloads, they are pretty high, but from a usage perspective, there's still a lot to be kind of desired from a universal bank wallet perspective compared to a Paytm or any other wallet, simply because the use case is so compelling and strong. They have tied up with taxi aggregators. They have tied up with specific merchants where you will go and make daily transactions or weekly transactions and make payments. So I think that's probably my view, saying that there'll be white spaces for both. Use cases will determine how each one will play up, and there will be some kind of competition emerging in the future.
Great. I think wallets is a very controversial topic, and in itself, I think can cover the day. So we're going to keep that aside. But Sohini, how do you think you're going to compete with both these segments?
Yeah, and I'm so glad you kept wallets out of this, because otherwise we would need the whole day for this panel only. But yeah, I think the one moot point that all of us agree on here is that the market is really huge and there is a lot that needs to be done. Now, there are obviously existing banks who have to continue to try doing something. There is a whole lot of these new entities that RBI is creating. And obviously these are in the hope that we'll all be finally be moving towards that universal goal. And that I think there's going to be a healthy mix of both competition and cooperation which will emerge. There are just 2 or 3 things that I think will be important, particularly when we try to look at these 2 very distinct kind of entities, the payment banks and the small finance banks. Personally, I would say I think I'm more convinced of the SFB logic for it to be able to meaningfully add to the overall country's economy, the goal of universal financial inclusion, and for the possibilities there for both large banks and these new entities to be able to combine their strengths to further better the offerings. In the payment bank space, I do understand. I'll just leave a little bit. It's kind of bordering on the wallet space, but Mihir, since you touched upon it, it's kind of tempting to just not comment on that. See, there are these, I think there are loads of assumptions, and that's a good thing. We really, when we are building future models, we have to base it on assumptions in the hope that some of these will stand the test of time. I think one small thing that I want to say is when you, about this entire customer base and distribution, right? Like there is a huge customer base and there is this huge distribution network. Now, this eternal question of whose customer is it? For everybody here who has, invested in stocks, and I would say this population here, there would be a large, do you consider yourself an NSDL customer? So it's not wrong on their part to assume that all these are NSDL customers, but let's go ask the customer this. Does he think that he's the NSDL customer? Similarly, when you book a movie show through Book My Show, do you think that you are a Reliance customer? Now, it's logical for someone sitting and making a business case to say all these entities that I own and all the people who have ever interacted, actually interactions and transactions get counted as customer bases. And a transaction is very different from owning a customer. I'll leave it at that without elaborating further. The second part is about distribution network. Now, the same logic should be extended there. Who owns that distribution? Unless you actually own it, the panwala who sells today 5 different kinds of telco, prepaid, and DTH, recharges, whose distribution is he? And obviously everybody in their own models can count him as their distribution. But really, is it going to be really cheap and cost effective to get what you want? Or how will it be different for you vis-a-vis, say, an existing bank to actually get that guy to deliver on a differentiated basis for you to count him as, or for you to count him as your distribution node? So I think those challenges will exist. But overall, I do agree that I think it's a right step. Something needs to be done, and I think some change is better than just sitting and going on and on with that same regulation about goading existing banks to do more of financial inclusion. I think RBI there has said, okay, let's put these new players and let's see how existing banks up their game, and maybe there's something that emerges out of the new things that we want to do.
Do you think a change in priority sector lending guidelines could impact the big banks to look at SFBs differently?
Change in what manner? Like, what change are you proposing?
One of the things that is required for banks to do is to drive priority sector, right? And more RBI's emphasis is on direct lending as a way to count towards priority sector, MFI being the only exclusion. Assuming that had to change and RBI had to say direct lending is what calls as priority sector, do you see the relationship with small finance banks change radically with that change in thought process?
So I think there are 2 or 3 things that can happen if that changes. See, any change in regulation will force the incumbents to go back to the drawing board and figure out what's the best possible way, because finally these are institutions which are meant to deliver returns to the shareholders, right? So I don't think existing models can work if there's a change in regulation. Yes, there could be one which is figuring out how to make a relationship with SFBs. Also, I would think it can drive existing banks to do something totally different. We're doing a little experiment right now, which is, it's very fancy to say, let's do tab banking in metros, and, you're doing all kinds of stuff on mobile and biometric, and, it works on the Apple Watch and what have you. But what stops, like Ram said, what stops an Axis Bank to actually deliver or come up with a solution or drive the technology team to come up with solutions which will truly be able to help existing banks do direct lending in a really cost-efficient manner? And there are some really interesting proofs of concept that we are driving right now in the hinterlands where maybe even MFIs haven't reached. So I think it'll be a bit of both. The easy answer is to quickly go and partner with whatever is there, because if there's a timeline, if there's a sword hanging, you would go and do what is required to meet the regulation. But if the cost of that is prohibitive, it will force the banks to go back and figure out models which can then again be efficient competition to what is currently what SFBs might think they're doing. So it can evolve in a couple of different ways.
Great. I think it, in my mind, throws a number of opportunities around, I think, interesting businesses that are going to get built in this ecosystem.
Can I just mention one last one, with your permission? I think for some of the startups in the room, and since we're talking about digital payments ecosystem, I think one area which has not been written about that extensively, which I dare say has not been covered that extensively as all you folks did your business cases for the payment banks, but is, to me, perhaps the most important use case, is actually building the merchant ecosystem in India. Think about it. India has only 1.1 million POS terminals, places where you can use your debit or credit, and there's 650 million debit cards today, but you can use them only in 1.1 million places. So to me, for example, what Paytm is doing is not so much the wallet side of the business, and I know there's a separate panel on that, but if you can sort of wire up DTH and, mother dairy and parking and electricity and metro and transit and milk and vegetables to actually have electronic payments, that's where the distribution network will actually drive it. It's not so much in the sort of domestic remittance use case, right? Brazil has, 14 million outlets.
Yeah.
China, because in China, merchant acquiring, you don't need a banking license, right? There's a regulatory arbitrage. So, of course, every Tencent or, Alipay merchant actually has this QR code, and you can sort of 400 million Chinese use QR codes to make payments. The merchant needs a smartphone, and customer needs a smartphone, and that's all it is. So think about somebody like a Vodafone or Paytm or, Reliance or whoever it is, putting this large infrastructure for digital payments. And they will need cool new technology. How do you make it smarter, quicker, cheaper? And that builds up interesting use cases for many of the folks in this room to build those models for the payment banks, right? And that makes money from day zero. It's not on love and fresh air and hope. It's a super required necessity, and it kind of architects what the economy requires in terms of less cash.
Yeah, I completely agree with you.
I think this was a segue into the next question that I had wanted to open it up to everybody on the panel, but only one comment I'll have, Raman, that you don't need to be a payments bank to do all of that. That's the only defense on the argument, but I agree with you, the merchant opportunity is a very, very big opportunity that somebody needs to address in this country.
But just to quickly respond to that, and I was in an interesting RBI meeting the other day, banks are not really gun shy of entering the merchant space, just so everyone is clear. But as Sohini will tell you, the problem is that the KYC and underwriting process for a merchant for adding on mom and pop shop to become a merchant is the same as signing on ITC Grand Maratha to be a merchant. And that kind of is quite strange, right? So the RBI equally is looking at, and I think, Soni, you made the point about identity and verification. And if you could think about conceptually a biometric-enabled merchant onboarding process, similar to what Square is doing in the US, or an app which you download and become a merchant and off you go, or if it's a P2P transaction, you don't need to be a merchant. So I think that's the difference that payment banks can make. Yeah, banks could do it, but they have to solve for it.
No, I agree. I think the next question that I wanted to open to each person was, you guys have looked at the space so closely from very different angles. What do you think are big opportunities for service providers to build new businesses in this space, either around technology or around processes or around helping each of these constituents become better at what they want to do? Go ahead, Mihir.
I think that's an interesting question because, traditionally what's happened is a lot of these technology companies, service providers, have been catering to the financial services, banking space, NBFC space. Now what is happening is with fintech coming in and a lot of, what Ram mentioned in his earlier presentation on specific use cases which these companies, technology companies are going after. What we are seeing is that globally, there has been an opportunity in three key buckets. One is the lending segment, second is the payment segment, and third is the services or the transaction management segment. So I think what is happening also in India is lending from a technology perspective, from a fintech perspective, has actually progressed quite well. A lot of lending companies are there from a fintech or a technology perspective, which also are looking to partner with some of these banks or these new kind of differentiated entities. Payments, when I say payments, it's the likes of TraxPay internationally. It's the likes of Payoneer, which enable smart payments, receipt of payments internationally, which I think is missing in India currently. So there are companies like Transerve and other entities that are trying to do their bit from a technology perspective, from a service provider perspective to some of these banks, but still there's a lot to be left from a payments perspective. And the last bucket that we talked about is the services perspective, where I can inquire for my balances, for my last transactions. I can actually see what payments I have made. So I think that is also progressing quite well with entities like Taulia and all coming into India. So, but the point is that service providers will have to adopt a different mindset to service these banks. The traditional ATM service providers are slowly, seeing that the growth is actually, kind of going down, and they are looking at other opportunities in the digital space, including the fintech opportunity. And that's where the focus will have to kind of move from a service provider perspective if they want to grow and, really kind of move up the chain to serve these banks.
Ram, Ananya, and Sohini, think about what new opportunities are coming out. I think you mentioned a little bit about the merchant. I would love for people to think about what are new ways of serving or white spaces that are getting created where all these institutions will want to benefit people either from the technology or processes to elevate their game.
I just had one point, just before we hand it over. So just to kind of answer on that or respond on that merchant acceptance thing, I think why can't we look like an entity like a Stripe, internationally, where you just kind of go online, download the APIs, and I can start, accepting payments, or as Ram mentioned, Square, which is prevalent in the US from a physical perspective. Entities are already starting to do that. But in India, why can't we have a Stripe kind of model where I just go to the website, I download the APIs, and I can start accepting payments? So it has to be simple and has to be convenient so that, I can probably increase it and, increase the acceptance of my payments internationally. So I think that's one thought, which I have. Sorry.
Great. Ram.
So, so you asked me to think about opportunities, and it's just not opportunities for banks. It's opportunities for service players. It's opportunities for new fintech startups. It's opportunities for all of us. And I would kind of bucketize that into 2 or 3 categories, right? One, I think Sohini made the point earlier about it's mission critical to keep costs low for the new players, and indeed for any player, right? So what's going to happen? Banks or payment banks or SFBs or existing banks or re-architecting are not going to build off core banking systems, and I'll go to Finacle and I'll go to Oracle and I'll do, and build and then build a middleware and then build a data warehouse, and that's the traditional model, right? So, and they're going to be pretty much outsourcing anything which is not required to be done in-house. I don't know if they are, but if I were them, that's what I'd do, because there's no point, biting off areas of non-core competence. And so the app economy is certainly going to flourish and thrive, and anybody who can meaningfully build something around geotagging, around contextual, around anything that's relevant will find takers. And I'd say not only among the payment banks and small banks, but if you think about in Mumbai, in the last 6 months, of all the appathons and hackathons held, 50-60% has been held by the established banks. You guys held 2, ICICI held a couple, and so everybody's going to clamor for that service, right? Anything that makes UI, UX simpler, for example, and less clutter in the banking context. So there's going to be a lot of demand for that. And the other part I see is in sort of getting to last mile distribution. Because I completely agree that many of these distribution points are notional and look extraordinarily cool in an Excel sheet, but the road may have a few speed bumps. And anything that sort of solves for that starting friction in distribution, leveraging software and technology is an incredible opportunity. And the third thing is digitizing of payments, and what do we mean by that? And I like the example you gave of sort of collections being electronified, for instance. So we work with Janalakshmi, which is a sort of super cool microfinance company out of Bangalore. And the loan is in fact disbursed on a plastic, right? And the collection is done on plastic and smartphone. There is no cash disbursed at all, right? So you mentioned the point about ATM manufacturers. We are solving for software that actually won't require a physical card to insert on an ATM. It could be biometric, it could be a mobile phone, it could be wave at it, look at it, whatever it is. And therefore, then why do you need to issue, all these millions of whether Jan Dhan Yojana cards or, any other cards? Because you don't require cards, right? So if the merchant can accept on a smartphone, and your smartphone or your feature phone with USSD can also solve for ATM, you don't require plastic. And solving for that would be cool. So I mean, the opportunities are endless. And I'd just like to close by saying that the fintech opportunity, and reflecting back on what I said earlier, is not about any player trying to see if I can get 1% of 1% of Axis Bank market share, then my Series C valuation looks better. It is about how can you coexist, cooperate, and in some cases there'll be acqui-hires of banks saying, I don't have the technology, I don't have this really cool bunch of guys and girls who are doing this, so why not just sort of acquire them and assimilate them? That's going to happen as well.
Great.
Yeah, so I think I'm going to put this in a very candid fashion, whether it's startups, digital platforms, apps, ATMs, payment wallets, changing consumer behaviors, everything that Ram mentioned. I think the opportunity here is to basically become into a cashless economy. And that's pretty much what it is, I think. So that's my answer. Yeah.
So, actually, Ram, you left very little to be covered, but there's one thing which I think is really important, and if there's a lot of startup people in this room, it would be interesting if they would think about this, is that all of the stuff that we are doing and is largely in the English language. And particularly from a finance perspective, try saying your account balance is so and so in any of the vernacular languages, and you will figure out that if you go and do a Google Translate, or if you just try to find the official word for it, the person who doesn't understand English will even further not understand what you're trying to say in that person's native language. So interestingly, today there are more internet-enabled smartphones in the country than there are English-speaking people in the country. And all the work that everybody is trying to do, all the cool stuff that is happening is all super competing in that same space. Is it possible for us to expand this UI, UX, the simplicity, this gesture-based stuff where it's just intuitive, the customer, you don't really have to use very fancy and big words in the native language, or some way that it can be a little combined thing? Now, there's a lot of stuff that will need to be done at the service providers or the products end also, for them and their systems to understand it. But is there a way for us to deliver that to the customers? I think that is one opportunity which, right from payment banks to SFPs to existing banks to fintechs, whosoever thinks they can crack that, I think there's a huge market for that.
No, I think those are all great answers. As everybody was saying, I was trying to make some notes, and there are 4 key common strands that I noted in what everybody was saying. If there is a business that can add convenience, be it around vernacular, UI, UX, merchant, distribution access, think about security to make sure that there is authentication of a particular way that is happening, that the transaction or an interaction that is happening is secure, is done in a low-cost manner, and somewhere leverages information to provide superior insight that others don't have. I think those 4 tenets are going to make for a very, very interesting and a compelling proposition to be offered to the entire ecosystem.